Today's webinar is going to focus on technical and fundamental analysis in the Forex market, and we will be going over a few techniques for analyzing the market with both technical and fundamental analysis, and we'll discuss how you can use the two techniques together to look at some of your Forex trades. Before we begin, we have our legal disclaimer. The purpose of this is to acquaint you with basic trading concepts in the Forex market. This overview is not intended as an exhaustive tutorial. The discussion of the trading techniques herein is for educational purposes only and should not be construed as trading advice or counsel. Please remember that foreign exchange trading includes considerable exposure to risk, and you should take into consideration before deciding to trade FX your level of experience, your financial situation, and your trading habits. Please only invest discretionary capital. The age-old argument between the two different types of traders in any market is technical versus fundamental analysis. Now, you're always going to get guys that prefer to use technical analysis, and then you'll get guys that prefer to use fundamental analysis. And both will swear that they are absolutely correct. And as of, I don't know, 10 or 15 years ago, you only had fundamentals. I mean, technicals existed, but it was very difficult, for people to have as much access as they do today. If you talk to old school traders, guys that have been in the market 25, 30 years, back in those days, charts were hand drawn on graph paper and were mailed to you, once a week. So all they had was fundamentals, and that's how they analyzed the market. And as technology and the computer age became more prevalent in trading as a whole, not only with the stock market, but now with Forex, a whole new level of market analysis gained popularity. And I think that's pretty much for one of two reasons. Number one, you're able to see charts, they update in real time. In Forex, the chart movements are updated to the millisecond. And the second reason is the general layperson can understand technical analysis a lot easier than fundamentals. Fundamentals goes back to some of the boring days that you probably slept through in college with micro and macroeconomics and why certain things happen, and the explanation behind those. And a lot of people have trouble understanding those concepts, but I could talk to you about support and resistance, which are just simply horizontal lines, and if price goes above, you buy. If price goes below, you sell. That's a lot easier to teach somebody than if the overnight interest rate in the United States goes up by 2% and the market expected 3%, then that in turn causes XYZ reaction. So you have both schools. And the main thing that you have for each one, for technicals, you have support and resistance, you have chart patterns, you have technical indicators. For your fundamental analysis, you have fundamental news and you have geopolitical events. Now we're going to talk about both of these, and my perception, the way I learned to be a trader is, I'm in my 30s. And I came up in the computer age, and I learned to be a technician and a technical analyst before I learned about fundamentals. But now I use a combination of both in the trading that I do, because I feel that you have to. Just relying on, let's say, support and resistance or moving averages and not being able to see an overall trend or be able to judge what's going on in the world, kind of handicaps you as a trader. So, technical analysis involves the uses of charts as a tool to identify patterns or trends in a currency market. It focuses on the effects of market movements rather than the causes. Technical analysis will look at a currency's past price to determine what might happen in the future. Technical analysis is straightforward. If it doesn't, the market, it's the chart doesn't care why the market moves. You have a strategy that you've set up, and if you're following the strategy on a technical analysis basis, it's cut and dry. There is zero room for interpretation. It's all mathematical. If X happens, then Y, and then Z, and now I'm making a trade. With fundamentals, there's a lot of room for interpretation and second guessing. What with technicals, if you have a technical analysis strategy, you have something that you put in place, and those are hard and fast rules that you follow to the letter. So it just focuses on the actual movements on the charts and not the reasons why. Before we go into fundamental analysis, I want to open up some charts and take a look at some examples of technical analysis and what happens with that. This is a chart of the New Zealand dollar, and what we're looking at here is a 1-hour chart with the 100 and 200 period moving averages on the chart. Now what we can see here is these moving averages are technical indicators. The 100 and 200 period moving averages are probably two of the most popular moving averages to use regardless of whatever time frame that you're using. And a lot of times these moving averages are used to predict support and resistance or breakout areas. And we can see that as this thing trends upward, a lot of times these moving averages are where the market pulls back to before it continues its trend. So when it pulls back, you're seeing that it pulls back to these moving averages and then continues up and pulls back to the moving average and then moves, and then it continues. We did finally get a break through the moving average, and we got a little bit more of a pullback, than normal. But these are straight up technical indicators, and the market is reacting accordingly. Now, we don't know if there was any fundamental news announcements or any other analysis that came out when these moved, but more than likely, maybe once or twice you'll get coincidence, but more often than not, when you see reactions like this, these are strictly technical moves. The market is moving on a technical basis in this case, and even a market this large, you will sometimes see these technical moves. But the overall whole of this move from down here at the end of November at 73.50 to the move up here to 84, that's a fundamental move. I mean, that is a fundamental move as far as New Zealand dollar strength versus U.S. dollar weakness. There's no technical indicator really that's going to cause the market to move that way. It's just a straight, that is an overall fundamental concept as far as why the market is trending and moving up in that direction. So that's pretty much what you're looking at as far as technical indicators. We can look at a few other things. For example, you have your dollar yen daily chart, and you'll see that when the market same type of scenario, your 100 and 200 period moving averages, and the market, this was during the BOJ intervention, and it ran pretty much right here to this 200 period moving average and pulled back. And then as the market kind of cruised along, it used this as its level of resistance, and then finally when we did get a breakout, we broke out above, and we've seen more movement on the dollar yen of late than we have in the last 4 months. Let's see if we can find some other examples. Now, now this blob-like indicator is what's known as an Ichimoku cloud, and a lot of times it serves the same purpose as the 100, 200 period moving averages. It predicts, support and resistance, and can predict trend and breakouts. And then, we're above the cloud, and as we're above the cloud, your upward trend continues. And then once we get a break, through the cloud, you see that the trend starts to change, and then finally we get another break through the cloud, and the trend is reversing. So we are in an upward trend, and this is going to predict when the trend might change. It's not going to tell you why the trend changed, but it's going to show you on the chart from a technical perspective that the trend is in fact changing from an upward to a downward trend. And then we're going to follow this on the way down with our moving averages and our cloud to see if this downward trend is going to stay and we're going to get a move here, or it's going to break back up through the cloud and the moving averages and resume the upward trend. So that's just some examples of technical analysis, and you can see them in all forms via chart patterns and support and resistance, and technical indicators. If you look in MetaTrader, you have a list of, I don't know, it's about 30 plus technical indicators that are standard that show you anything from moving averages to overbought, oversold conditions to Bollinger Bands. So these are all technical analysis indicators based on mathematical formulas. That takes nothing else into consideration. And there's hundreds, if not thousands, of additional indicators that you can download online, which will provide more technical analysis for you. So, technical analysis is a complete way to analyze the market in and of itself. And, it's a lot of, there are people out there that are strictly technical analysts, and they feel that their way is right. I, on the other hand, feel that you need to use both. Even though I started with technical analysis, and I think there's a lot of merit to it. For example, we have a trend line here. It's really, really easy for me to see that I have a trend line here, and when it breaks the trend line, I want to trade it short. I mean, that right there is a really, really easy way to look at the market. And in this particular case, even though I just picked this, picked this move out, you can see that you had, it's a 50 pip move right here. That would have been a great, great little trade, and it falls in line with some previous elements of support, and you would have had a good entry and exit strategy for this strictly on technical analysis. But at the same time, I want to be able to know that there's some fundamentals behind this which may indicate that the shift in the market is starting to happen, so that I can follow the trend. So I can know that the Aussie dollar is starting to go from strong to weak, or the Canadian dollar is starting to go from weak to strong. So that at least if I'm going to take a trade one way or the other, that there are the fundamentals to back it up, and that I can use the technicals as a way to enter the trade. Before we start talking about fundamentals, does anybody have any questions about some of the technicals that we're looking at? Okay, we'll take a look at some of the fundamentals. I'm not going to go too in-depth as far as fundamentals. We'll take a look at what fundamental analysis is and some examples, and we'll look at some news events, and we'll talk about what's going on in the euro and how a lot of that is fundamental and not technical. Fundamental analysis studies the cause of market movements. It's the study of news for information on political climate, international relations, natural disasters, and other worldly events in order to determine what might be coming up in the trading arena. Fundamental factors that many traders use when deciding whether to stay with a trade or sell, besides those already mentioned, include your unemployment rates, inflation, fiscal policy changes, stock bonds, or money markets. This is a rundown of some of the biggest news announcements that come out and what they actually mean. Because a lot of times you'll see, the Bank of England is meeting today to discuss the interest rate and whether or not they're going to raise or lower the interest rate. And obviously, that moves the market, but a lot of times people have no idea what that actually means and what a raising or lowering of the interest rate is going to do. So interest rate, traditionally, if a country raises its interest rates, its currency will strengthen because investors will shift their assets to that country to gain higher returns. And obviously, if it lowers its interest rates, the currency will weaken because investors are shifting their assets away from that country because their returns are not as high. Your unemployment numbers, like non-farm payroll, for example, is probably the most active trading day of the month, which is the first Friday of every month, which is an employment number. Decrease in payroll employment are considered signs of a weak economic activity that could eventually lead to lower interest rates, which has a negative impact on the currency. Trade balance budget and treasury budget. A country that has a significant trade balance deficit will generally have a weak currency, as there will be continuous commercial sellings of its currency. Now, as you can see, we're starting to describe some of what's going on, and it's already much more complicated than if the price goes below this line, we sell. There's actually some thought that you need to put into what's going on and a look at the news announcement itself and an understanding of what news announcements are going to do. I'm going to show you a website in a minute that's going to be able to explain the different, show you when the news is coming out and explain what the different news announcements mean as they're reported. Another good example is GDP, or gross domestic product. It's reported quarterly and is followed very closely as its primary indicator of the strength of economic activity. A high GDP figure is usually followed by expectations of higher interest rates, which is mostly positive for the currency. Okay, so let's jump out of this and take a look at, this is a website called Forex Factory. For those of you that don't know, forexfactory.com is a great website to use for news announcements. For example, today we had New Zealand core retail sales. If you need to know what that is, this website will show you exactly what everything means. It'll show you not only the country, like the currency, the news announcement itself, the forecast, and the actual, but it will also show you what it is. For example, change in the total value of inflation-adjusted sales at the retail level, excluding automobiles and gas stations. This tells you what core retail sales means. This will also say usual effect, the actual, which is this number right here. You see actual versus the forecast, which is here, and what it does. So let's take a look. We were expecting 1.1%. We actually got 2.9%. So if the actual is better than the forecast, that equals good for the currency. So let's take a look at the chart. Go to the New Zealand dollar. Where did it go? Let's just zoom in. So we'll see, it came out about 7 hours ago. 1, 2, 3, 4, 5, 6, 7, right about here. So our actual was 2.9% versus expected, which is 1.1%, and this is what the New Zealand dollar has done since. Fundamentally, good for the New Zealand dollar. We are up from 82.70 or 82.80, all the way up to just about 83.85. So that's 115 pips in the last 7 hours. Basically this move happened based on fundamental announcement. The technicals on the way up really didn't come into play. You had a very large move to the upside, and it broke right through. Didn't even stop, hesitate, or anything. Just broke right through our 100 and 200 period moving average. When it pulled back after the the initial move after the announcement, you see that we did pull back right here to our moving averages. So this gives you an idea of how some of these things can come together and work together. So if you were if you missed this initial move, you knew the fundamentals were good and you were looking for a place to possibly get back in to the trade, or get into the trade, you could have played the bounce off this pullback and these moving averages and used the tight stop underneath that. So this is why you always need to know when the news is coming out and what effect certain news announcements might have. Forex Factory is a great site. You can filter it so that you can show certain currency pairs, and if you want to get rid of announcements that may not have an effect on the market, you can just get rid of the yellow and the white, and then you'll only see things that should have some sort of impact on what's going on. So for example, tomorrow we see that we have the inflation report out of Great Britain, and we also have the FOMC meeting minutes from the United States, which is usually a market mover. And then we have Australian unemployment rates. So tomorrow is going to be a busy day news-wise, which should have an effect on the market. So you need to be able to pay attention to that. Because for whatever reason you're in a trade, let's say on the Australian dollar or any other currency pair that's affected by the Australian dollar, and these are Eastern Standard Times, and it's 7:15 Eastern Standard Time, and you're still in that trade, you need to know in 15 minutes that a major news announcement is coming out that's going to drastically affect your trade. It doesn't matter what the technicals are or anything else, that you need to know this announcement's coming out, and that is going to have an effect on your trade. So always pay attention to that, and you can use fundamentals and technicals hand in hand to show you what's going on. Now, one of the situations that's been at the forefront of everything has been the euro, and what we've seen. We'll kind of look at a larger picture. Is this was October, November of last year, and this is really when the euro started to have issues, as a whole. And there was a lot of rumors that were coming out of Europe that Greece was going to be leaving the European Union, and that Greece was broke, and Spain was broke, and Italy was broke, and everybody in Europe was broke. And it really pretty much led to the downfall or downturn of the euro from 143 to 126 over the course of a couple months. And then as they started to come to the table, negotiate, and possibly talk about bailouts and getting everybody back on track, that's when you saw things start to shift. And this is pretty much, and then when we take a closer look to what's going on more currently, this is like when the Europhoria kind of took place and everybody was coming to the table and things were going to get worked out. You saw this shift, and we went from 126 to 133, and then you had the discussions that the deal may not be as rosy as everybody thought it was, and that changes the direction once again. And all this chop through here is all based on headlines. It's not based on technicals. It's based on fundamentals and headlines, and this might be happening or that might be happening, but you still have some of your technical trading in here, and when your moves go through here and stop and turn, and then when things pull back and they pull back to here, you need to be aware of these technicals, so that you can use them for entry, because for whatever reason Greece decides to delay the deal, and then the euro starts to tank. You want to be aware of where these technical levels are so that you can possibly use them for entry or stop losses or take profits, so that you can get in, out, or protect your trades as best as possible. Right now, I will open the floor to any questions that anybody may have about the webinar in general, technical analysis, or anything Forex related. I'm happy to answer any questions that you guys may have. All right. It does not look like we have any questions coming in. If there's any trade setups or any currencies that you're looking for, feel free to ask that as well. If not, I will let you know. I'll give you my contact information. Here's my contact information. It's jeff@synergyfx.com.au. You can follow us on Twitter, twitter.com/synergyfx. We post things every day, our market analysis and market commentary. And then the blog is synergyfx.wordpress.com. We post things also on there a couple of times a week. We'll post a full week-long outlook and some trading levels that we're looking at every Sunday, every Monday, so you can follow along. For whatever reason you don't have any questions today and you want to contact me in the future about the market or any other things that you need information on, please send me an email. Once again, it's jeff@synergyfx.com.au. If anybody has any questions, throw them out there now. If not, I will let you know. We do 3 webinars a week with Synergy. One on Monday to discuss the week ahead, one in the middle of the week, which is today, to have an educational topic, and then one at the end of the week on Friday to kind of do a week in review. So please keep an eye on your emails and join us for those webinars. Since there are no questions, we're going to wrap up for today. Thank you all very much for coming, and enjoy your day, and good luck with your trading.